No matter what strategy you use, and no matter how sophisticated your system is, there is one thing you can never escape in trading: the dark period, the drawdown. A strategy that was making money yesterday suddenly starts losing today. Your equity curve rolls over and begins falling in a straight line. Every trader knows that feeling. It's the kind of fear that keeps you awake at night. I've been there too, and I became obsessed with one question. Is there any way to avoid drawdowns before they happen? Could I switch to another system only during those bad periods? Could I improve my entries enough to make the losses smaller? I spent countless hours trying to solve that puzzle. First, I tried reducing my position size after a losing streak. I assumed that consecutive losses meant a drawdown had begun, so I wanted to protect myself before the damage got worse. It failed completely. The system I traded had a low win rate. It lost often, but the winners were much larger than the losers. For that type of system, losing streaks were normal. They weren't warnings. They were simply part of the business. I was reacting to noise. Then I tried something else. Paper trading. I watched the market without risking money. I mentally counted the losses and waited. I thought, after this many losses, the probabilities should be shifting. The winning period must be close. Then I would start trading with real money. It seemed like a perfect plan. It was a disaster. Almost every time I started trading, the real losing streak began right then. I had accomplished nothing. I had simply delayed the pain. Eventually, I ran out of ideas. No matter what I tried, the market seemed to take my money anyway. Then one day, I casually reread several years of my trading journals. And I noticed something strange, something deeply distorted. My system had a low win rate. Most of the time, it slowly accumulated losses. Yet every once in a while, there would be an unbelievable day. A day with no losses. A day with only 1 or 2 stop-outs. At first glance, it looked like I had found the Holy Grail. Then I turned the page. The next day was almost always a disaster. Huge losses. Complete destruction. And it wasn't a coincidence. It happened again and again. Human beings are strange. When a low win rate system suddenly produces a string of big wins, we lose our objectivity. We start believing that we've become better traders. We think we're in sync with the market. We feel special. Then the next day, filled with confidence, we attack the market again. And we get crushed. I wondered if this was actually a statistical pattern. So I pulled out all my historical data and did the math. The results stunned me. After those unusually good days, I suffered major losses nearly 90% of the time. The answer turned out to be incredibly simple. Not a new indicator. Not better timing. Not a more sophisticated technique. The rule was this: after a day of exceptional winning, don't trade the next day. That's it. No matter how good the charts look, no matter how strongly you feel that another opportunity is coming, don't trade. Don't even open the platform. I applied this rule to my historical testing. The results were shocking. For years, I had tried to avoid drawdowns directly, but simply adding one filter, taking the next day off after an unusually successful day, dramatically improved my overall performance. That discovery changed the way I see trading. Now, when I have a great winning day, I don't get excited. I know it's not proof of skill. It's simply variance. Probability has temporarily moved in my favor. Eventually, it will move back. The market always reverts. I now see winning streaks as savings accounts. Money that may be needed to survive future losing streaks. And because of that, losing periods don't break me anymore. I know the probabilities will eventually swing back. I just have to wait. Over time, something unexpected happened. Trading stopped being exciting. Winning no longer made me feel euphoric. Losing no longer devastated me. The emotional high,